Hello and welcome to Bloomberg Quint. We are here to give you a gist of all that transpired in the markets today. Well, the Indian markets gave up most of their gains on account of the nervousness ahead of the RBI monetary policy review outcome that is expected to be out tomorrow. So it's the domestic events and not the global clues which are actually directing the Indian markets, and I can tell you that because the Indian markets gave up most of the gains just in the last hour when European markets actually turned positive. So the Nifty ended with a marginal 14-point gain above that 8100 mark, holding an 8100 mark, but closed at the lowest point of the day. But Agam, where does the volatility index stand ahead of the RBI policy?
Well, we've actually seen volatility come down by as much as 1%. The reason is that we are looking at consolidation. Traders, for all the positions that they had to take, have been taken in the previous few sessions in the run-up to the RBI decision, and this was evident in the options activity that we saw yesterday. With respect to the futures and what's happened today, we've seen a slight increase in both the bank Nifty as well as in the Nifty 50 index futures, but this doesn't really say as to whether or not these positions have been taken towards the long or the short side. So far, we have seen some amount of strength, but as Shraddha has already mentioned, we've seen the Nifty give up a lot of its gains that it's made earlier in the day. That said, with respect to option premiums, well, they remain high, and that's reflected in the fact that we've seen the India Volatility Index remain at the mark of around 17. So once again, we'll have to wait and watch as to what kind of trades we see tomorrow morning before the RBI policy, and as we move into the big event, and that will also determine the direction of the Nifty hence.
Yeah, so today seems more like a day of transition, between the two periods when the market has already priced in a 25 basis point rate cut, which we will talk more about, and between what actually happens tomorrow, what the outcome is tomorrow. But in terms of the sectors, there was mixed behavior that was seen. So Bank Nifty, of course, interest rate sensitives, if you look at those, the Bank Nifty ended almost unchanged. The real estate index, however, was sitting on gains of over 1.5%. But if you look at the Nifty stocks, Tata Power, Idea Cellular, HDFC were amongst the top gainers, leading gains. On the other hand, you had Bosch, HCL Technologies and Power Grid Corp that were among the laggards. But that apart, Agam, we also saw Tata Group stocks buzzing. So you had Tata Sponge, Iron, Tata Chemicals, Tata Power, Tata LXI, Tata Steel, all were amongst the gainers.
Sure, and some of these names have also made the broader market gainers. Let's talk about the Nifty 500. With respect to the advanced decline ratio, we're looking at 3 gainers as against 2 losers. Just like yesterday, we've seen gains in Tata Sponge, Iron. In fact, that's gained about 13%, followed by National Aluminium. So we have seen gains in metal stocks in general, up as much as 9.9%, followed by Adani Transmission. GM Financial from the financial space up as much as 8.4%, followed by Jindal Polyfilms also gaining 7.2%. With respect to some of the losers in today's day of trade, we have seen weakness in Ratan India Power down 5.4%, Phoenix Mills and Mangalore Refineries, both these stocks losing well over 4%, followed by Supreme Industries and Shoppers Stop. So we have seen some amount of weakness, but on the whole, once again, the momentum belongs to the gainers in today's day of trade, not unlike yesterday. Going into tomorrow, of course, it's going to be a very big day with respect to the interest rate sensitives. Well, the reason, of course, is the RBI policy, and for that, why don't we just ask Alex to tell us and talk us through as to what we can expect going in tomorrow with respect to the RBI policy.
Well, I myself don't have a view, Agam, but then over the course of last week, we actually spoke to a lot of top economists, and the poll that we conducted had 13 of those top economists, and a large portion of them, 77% actually, expect that the policy rate will come down by 25 basis points. One of the respondents actually expects a 50 basis point cut, whereas the remainder 15% think that there won't be a cut. Now, the reason why so many economists think that there's going to be a cut tomorrow is primarily because of growth concerns, and that's coming after demonetization. There are various estimates floating around as to what the impact of demonetization will be on economic growth. We actually asked these economists what they think, and remember that the RBI, before this demonetization and the last monetary policy review, their estimate for the entire year was 7.6%. Now we asked these economists how much they think that projection or that estimate will be reduced by. And again, a large portion of them, more than 50%, said that 50 to 100 basis points would be like the likely reduction in the estimate for GDP growth for the entire year. A smaller number, 38%, expect a less than 50 basis point reduction. So a very large number of the economists that we spoke to, Agam, expect that there's going to be a reduction in the estimate for growth. Now, another point that counts in favor of a rate cut tomorrow is the fact that retail inflation has cooled. In October, it came in at 4.2%, and remember that the RBI's medium-term target for inflation is actually 4% plus or minus 2 percentage points. So it's 4.2% is not too far from the medium-term target. The target for March is actually 5%. So there's quite a large margin between what was seen in October and what the target is for March. So we actually asked economists what they think the target for inflation would be for the RBI, whether there would be any changes, and what they said, a large portion of them said, 85% in fact said that the RBI would shift it to below 5% from the current target of 5%. And remember, the last policy, the RBI actually retained its target of 5%, but it said that there's a possible upside risk to that target. So a lot of the economists that we spoke to said that upside risk has now, gone away, so to speak, but they don't expect it to come far below the 5% mark.
Right.
Finally, the most key element that a lot of people will watch for in tomorrow's policy is the commentary on liquidity. How much money has actually been brought in to the system? How much has been collected by banks of the old 500 and 1,000 rupee notes?
Right.
There was about 14.1 lakh crore rupees worth of 500 and 1,000 rupee notes that was in the system pre-demonetization. How much has actually come in? And based on that, how are they planning to suck out that excess liquidity? Remember, over the past few weeks, they've used the reverse repo window, but they were curtailed by the fact that they had only about 7 lakh crore worth of government securities to offer as collateral to banks for the reverse repo. So they actually introduced the CRR measure, where they said that the daily limit would be raised to 100%, but that's a temporary measure. Just last week they had the market stabilization scheme. So that has actually increased to 6 lakh crore from 30,000 crore. So they're every day issuing bonds under the market stabilization scheme. So how long the CRR measure actually remains? There's one economist who actually said that there's a possibility that the CRR, that's a cash reserve ratio percentage, the rate could be increased tomorrow. So that's another point to watch out for. A lot of key elements to watch out for tomorrow.
Right. That's right, Alex. The comments on liquidity will actually have multiple implications as far as the bond yields are concerned. And again, as you mentioned, 25 basis point rate cut is something which has already been more or less priced in. But is 50 basis points repo cut a good thing? Well, not necessarily. It could mean two things. One, of course, that the RBI is probably estimating that the economy could only see significant stress on account of demonetization, and hence the need for a quicker rate cut to be able to spur growth and arrest any significant fall. Again, on the other hand, a larger rate cut or a faster rate cut also means narrowing down of the yield differential between the India bond yields and the US bond yields, again, which is something which is negative as far as the Indian the FI inflows are concerned. So multiple ways of looking at this situation.
And it's interesting that you talk about the bond yields, because as we stand right now, Shraddha, they're below the repo rate.
Right.
And so in that sense, both as a factor of the amount of liquidity that has come in, and also the fact that a lot of people in the market have been building in for some time, a 25 basis point cut. You can see that on the short term as well. You see the CP rates that have really gone down in the past few weeks. But certainly at 6.21, if I'm not mistaken, the 10-year benchmark is already below the repo rate right now, which is almost unprecedented in that sense.
That makes us wonder how much more scope there is for it to fall any further. But having said that, I'm just going to tell you where the bond yields are. Today they're absolutely flattish, down just about 1 basis point at 6.203. That's where the 10-year government bond yield stands at. Remember, it has already dropped by about 60 basis points since 8th of November. asset class is the currency. So the Indian rupee has appreciated about 28 paise versus the US dollar today, making it the 6th straight day of gain. So lots to watch out for tomorrow. This is all for today's edition of Market Trap. Join us for our broad and detailed coverage on the RBI policy tomorrow. Till then, stay tuned to Bloomberg Quint.